It's Thursday, February 20th. Let's level up. Again, we had one of these push me, pull you situations. VIX is not confirming new highs in the market with new lows. Bulls will need to clear 1427 on the downside in the VIX in order to confirm that, but so far they have not. As far as the ES and the NQ, we had liquidation breaks early, seems to be the case, and then we have these rallies into the close. You have a lot of people who chase the short early, aren't rewarded, and then they cover their shorts into the end of the day because they don't want to go home with positions, they want to go home flat. I found it encouraging that the bulls were able to hold the 6100 level. We did repair the 6104 rich close from a few sessions ago. But generally, as long as the bulls hold 6100, I think they're fine. Below there, we are talking lower levels, and maybe in spectacular liquidation break form to 60.50 and maybe even to 60.37.5 again. As far as Qs go, we did have a dip below the 78.6. That's the 22,074 quarter. We ultimately did clear it, but we have yet to be able to reach the 100% retracement level at 22,450. So what now? Very simple. Bulls need to hold 6,100 and they need to hold 22,074 quarter. If not, we're probably coming down to 22,779.21, 21,779 quarter, and like I said, the 60.50 and 60.37.5. As far as SPY goes, bulls did dip into under 100% retracement territory, of course being below the 609.07. They were able to hold above the 1218 Fed day high at 606.41, so what now? That 606.41 to 609.07 area needs to hold. Anything below there, I think, sees the liquidation break to 601.85, which is the 78.6 of the range, and probably the 50 MA, currently 599.34 and rising. On the upside, anything over 609.07 I do think can challenge new highs. If it were to do the yellow channel tomorrow, that'd be 627, and if we were to do the green channel tomorrow, we will of course not do either of those tomorrow, but it would be 643. On the upside, I think you can do some type of call spread if you want to play for that, longer dated. VIX is cheap here, so why not play purely directional? It's also a good opportunity to put on some hedges if you want to buy some puts or put spreads. As far as Qs go, that had a bit of a deeper test into range. We didn't quite get the 78.6 at 530.71, but we also didn't quite close over the 100% retracement at 539.15, so what now? Bulls will need to hold 536.88, which is the apples-to-apples 1218 Fed day high, and clear the 539.15. If they can't, on the downside, today they were able to hold the 10 MA, but if they can't tomorrow, meaning below 532.82 and below low of day at 532.46, I'm not so sure the 530.71 area would hold, that being the 78.6. I think we would come down to the 20 MA and test trend at 528.21, and then we'd see if that doesn't hold. The next big downside is 61.8 and 50-day MA confluence between 524.08 down to 523.66. On the upside, if we are able to clear and rally, the underside of the old up green channel would be 547, so if you're long Q calls, maybe sell 550 as your hedge. If you want to do a teaser on the upside, maybe buy 560, so you could turn it into a synthetic butterfly. If you're long shares, I'm still good with trimming here, with selling either at the money calls or just out of the money calls. If you want to fund some put spreads longer dated with that, that's fine by me as well. Gold has been super strong, new high today. Down a little in the overnight session. We do tend to see some weakness on Fridays. The 10 MA has been the key MA, 267.99 and rising. Our upside target being the 2 times range at 279.29, and that of course being judged from the 1030 high down to the 1114 low, which of course negated the triple tap head and shoulders. As far as Bitcoin goes, nice little bounce today. We are still in a downtrend. We are still below the 50% fib at 99,838. I've told you I need to see this over 100K and hold for me to feel comfy. Better still would be over the downtrend at 101,443. I think it's just consolidating here after a big run, and we do seem to be potentially transitioning from bullish to bearish, but generally just a consolidation as of now. I have been leery since we saw the 121 candle have a look above and fail of the 1227 candle of the 108,960. Anything below there technically does still keep the look above and fail in play, so caution is warranted. TLT kind of night putting, still making some higher lows but not making higher highs. To me, this looks like it's deciding between higher and lower interest rates, but I think we're going to be on hold for the next Fed decision, so it may just chop around here for a bit. Ultimately, I do think that there could be a rally in bonds, but it hasn't really shown its hand just yet. Apple consolidating well over the 61.8, anything over 241.54 I think could see the 251.39, 78.6, that whole fib to fib thing. We like to go by MA to MA, fib to fib, seems to work. NVIDIA, we got the 124 gap fill at 124.62, backed off, and we seem to just be consolidating above the 137.80, 61.8 of the range. Bulls are fine as long as they hold the 100 MA. Anything below 137.12 I think is a short. Above, long, below, short. Booking up after hours, just don't let it get below 5,000 on you. Usually there's a contrarian relationship between that and Expedia. Expedia did go up on numbers, which took booking with it, and usually booking will report and go the opposite way on their numbers, but we did talk about that in the last video, and I said that I thought that there was still some potential for booking on the upside if it could get over and clear 5,000, so just don't let it get below 5,000 on you. Meta seems to be pulling back after having been up 20 days in a row. I think anything below the 10 MA is a little iffy. That's the 716.93, and the after hours earnings pop high was 716.17, so technically there could be liquidation break below there and below 710.30 and anything below 700. The top side of the green channel gave, so we could see the top side of the yellow channel. If we did that tomorrow, it'd be 682.03. I would be interested in buying the dip closer to the 638.40 breakout, which would be closer to the 50 MA, and that, of course, being the 1211 reference highs. Remember, that area was some resistance, and the 602.95-ish area, that 600-ish level, had been a lot of prior resistance, so I guess if there's a larger liquidation break, that could be a downside target. If you want to go a little longer dated and do some 1-by-2 put ratios or even 1-by-1-by-1s playing for it, I'm good with that. Walmart kind of set the tone today. I had said I thought that there was some chance for some back off given that we had run into the numbers, and that back off did take place. I think the bears can stay short below basically $100. Anything below, I think, could continue pulling back. The 50 MA is a little lower at 95.67, and the channel low is down at 93.48, which would be very close to the 2 times range at 92.81. So what now? I think we are trading in a channel. We may pull back to the channel low. I'd be leery of any bounce. I usually think that after big pullbacks, all the sellers aren't done the first day. Keep on guard for a dubstep tomorrow, and I think that dubstep candle could be a stop if we have a move over that high, or a short if we press below the 2-day lows. Generally speaking, we have seen profit taking on Friday. It tends to color things for sentiment gauges. I don't read that much into Fridays, particularly if we're up. This whole week, though, has been really choppy with a lot of short squeezes and liquidation breaks, so my guess is that that will be the continued situation. I think that people try to force the market to pay them, and they wind up being frustrated for that. If you want to stay in the loop and continue trading, maybe some smaller size, and look for maybe singles and doubles instead of the home runs. The market's consolidating 2 years of very large gains. There's some uncertainty now around the end of the Ukraine war, tariffs, and all the whole media litany of things to discuss. We're also post-earnings season, and Februaries tend to be a little bit weak, and we haven't really seen that much weakness. It's been just a few percent off the highs. My guess is that we will see an end of Q1 rally for March. Do you think dips will continue to be bought? The Chinese stocks tend to be on fire right now. We've been bullish, particularly on BABA. Just don't let that get below the 117s on you. Like and follow for more.